Right. Today's SPY was up 0.24% as we continue to march higher in that blue skies territory that I talked about yesterday. And all that means is we're at an all-time high breakout where we're going to start liquidating a lot of the short positions, because when you get an all-time high breakout, you are in that blue skies territory where there's little resistance because you're in territory that has never been charted before. And bears know when you get into that situation, the sky is literally the limit on how high the stock can go, and that is why the bears start running for the door, covering the short positions, and that does bring in even more buying pressure. So with that being said, there is a very good chance SPY is going to continue to march higher here with that target up there at 616. If we blast right through 616, then we'll be looking for 624. And there is a very important quote by one of the best investor legends there are, Peter Lynch, that far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. And this is a good reminder that while the chart is bullish, while price is above all the moving averages and the chart is saying that we're trending higher, trying to call exactly where that high is going to be and when the correction is going to start and the magnitude of that correction is going to mean that you lose out on more money trying to anticipate the correction by being too fearful to participate in the bullish market, or even more money will be lost if you're shorting the bull trend, because obviously if you're shorting and it's going higher, you're losing money, and you will actually lose out either more potential gains by not participating, or you will physically lose the money by shorting it by trying to guess when this thing is going to top instead of being objective price action trader that I'm teaching you to be, which is going to mean that we need price to actually break down below support at SPY 608. So heed my warning, at some point this market will top and it will correct, but trying to anticipate or guess that moment in time and trying to short it ahead of time, especially without any sort of price action triggers to tell us it is time for the market to go lower, could be very detrimental to your long-term success and profitability. So SPY above 608 is bullish. Please keep it that simple. If SPY starts breaking down below 608, we still have a ton of support below that, which means we could easily just continue to make higher lows and higher highs and continue to march higher. At some point, this market will top. We will see it in price. We will see it in trend reversal. We will see that rollover in die effect. And more importantly, we will see it in price. And that means SPY will break down below 608, and then we can start looking for more bearish probabilities. Please keep it that simple. Don't do anything to blow up your trading account by trying to fight the trend, because as I always tell you, the trend is your friend, which means continue to trade in the direction of the trend because it is a bull trend until it's not. And that means price will trend higher until we see evidence from price that it is no longer following the trend and that something else is happening. And then we will adjust accordingly and move like water. And when we move like water with maximum flexibility, we will continue to absolutely crush this market. On the NASDAQ 100 triple Qs, we had an extremely exciting day of going up 0.03%. And more importantly, we got the second day in a row closing above the all-time high breakout at 538. So just like SPY, we're in that blue skies territory with that new all-time high price target at 546. Just like I told you on SPY, this is a blue skies territory breakout, which means there's little resistance as we are in this territory of all-time highs above this level at 538. If we start breaking down below 538, we still have very strong support at 532 and 530. So 546 is the target as long as we're above 538. If we can't hold above 538 and we start heading lower, then we're looking for 532 and 530. So keep it very simple. Bull trend until it's not, which means we're trending higher until the chart tells us we're not. And that will be evident in price. And then we can start adjusting accordingly. But right now, it is much more profitable to ride this wave to higher prices. Quickly, I want to look at the VIX, because another indicator that the market will start to pull back is if we get a very volatile spike in the VIX up towards 18 and 20. As we break through support, that will be another indication to get risk off. But right now, the VIX could be heading lower. And again, a lot of people are going to try to guess the VIX is going to spike. And that is the same thing I talked about with the Peter Lynch quote, that far more money is lost trying to guess when a correction is coming than will actually be lost in the correction itself. So don't just assume the VIX has to spike off of 15. As you can see from the left side of your screen here, the VIX has gone down as low into the 12s. So we could easily see the VIX doing that again, which would mean volatility is leaving the market as we continue into that blue skies territory to all-time highs. So let the price action on the chart do all of the talking, which means as we're looking at SPY, we are above 608, we are going higher. That is the definition of letting the chart do the talking and following the price. And the price on the chart is what you are trading. We are not trading some guy's opinion, some guy's prediction. We are not trading some economist's forecast. We are trading the chart, and the only thing that pays us on the chart is the price moving, and the price is currently moving in a bull trend higher. So let's keep it that simple, and let's not overcomplicate it, and let's go absolutely crush this market.